Hey guys, Akil here, and today I want to spend a few minutes walking you through my favorite trade to execute in the markets. This trade is called the pullback trade. It's a very simple trade that's been around for years and years and years, really since the beginning of technical analysis. And it doesn't involve any special indicators. It doesn't involve anything fancy, no Bollinger Bands or anything like that. Simply the ability to read a price chart. And I'll tell you what, it's something that we look for each and every day in my live trading room, as well as one of the key trading techniques that we use in our syndicate program. So check it out. All right, so we're trading higher currently. We do have some inside levels of structure to pay attention to, but the next major level of resistance is going to be higher up here at about 134.26. So very similar to the euro dollar situation, there is the opportunity that price can travel across this whole kind of open white space and make it to our next level, which was also our previous level of structure resistance up in this zone, this 134.30s area. So keep that in mind as we go down to the lower time frames here with the euro yen. Now you can see that price action has recently gone overbought, right? So price action has done this, right? We spiked down into this consolidation. We've double bottomed, right? We actually double bottomed within the double bottom. We had a trend violation right here. We came back to retest, and our most recent move was a higher high, higher close above our previous level of structure. So again, we identify higher high, higher close. That allows us to make the prediction that what is likely to happen, guys? Are we likely to continue higher or lower? We are likely to continue higher, yeah. So the question is, all right, well, we know that we're likely to continue higher. If we continue higher, where are we likely to continue higher to? I kind of mapped that out for you already. And now the question is, the second question that I like to ask is, well, if we're going to continue to said level, how are we likely to get there? And there are always two answers. I love it. There are always two answers. One, price just goes straight up, boom, and gets there. Two, we pull back in the previous structure resistance, which should now act as support before moving up. And now, depending on what type of trader you are, right, you start mentally rehearsing the rules of engagement in your trading plan, and you should know exactly how you want to enter. If you are a counter trend trader, well, you don't really care what happens down here. You're just waiting for price action to get to this next DSR level, and you're looking for an opportunity to short. If you are a trend continuation trader, well, you're going to your trading plan. You're saying, well, can I be a breakout trader? So if price action consolidates here, right, can I trade a breakout in the anticipation on the way up? If you're a pullback trader and you're waiting for a pullback and you're saying, how can I get involved then? So the next question in that prediction, or the decide factor, right, identify, predict, decide, is really, hey, what type of trader are you and how do you attack the markets? And that should be your goal whenever you're using your higher time frame. You should be able to decide, do I want to be a buyer or a seller? And that's going to help eliminate half of the evil thoughts that are going through your mind. Because typically there are all types of evil thoughts going through your mind where it's like, well, this is this and that and that, and this is this and that and that, and I can buy here, I can sell there, and you get overwhelmed with all these thoughts, and you end up getting analysis paralysis, where you sit and do nothing. Greg says, oh, learning moment. See why I told you to go through the course one step at a time, Greg? Yeah. Might have saved you some money. I might have saved you some money there. Great to see a learning moment. Fantastic. We want to eliminate half the thoughts and just focus on the side of the market that we want to be on. So as I look at the euro yen here, I want to be short, or I want to be long. That's what I want to do. I want to get long, and I'm looking for reasons to get long. Now, we're currently putting in sort of a rising wedge here. Not as good as your traditional rising wedge, but typically this is a sign of it as exhaustion. So price action has made a very aggressive move up, as you can see. Now we're starting to get exhausted a little bit. What I would expect from this type of formation is some type of retracement. And if we're going to get a retracement, there's a few levels we can look at. One level is right here, 133.33. Another level is going to be right down here at 113.18. I'm going to load up a range bar chart as well because I love me some range bar charts. And this is the level that I'll be looking at. Again, price action has pushed up, right? We put in a consolidation pattern. We broke out to the high side, came to retest that level, came back up. If we get a retest of this level again, this is an opportunity where we've seen buying pressure in the past. I'd be looking for buying pressure in the present as well. I think it's a good opportunity to look for a buying opportunity there. Now, I'll tell you what, we actually got, I'm going to go and buy this Euro Yen up. We actually got, I was checking out the range bar charts. I was neglecting my 5-minute chart. We actually got a higher high, higher close here on the 5-minute. Up at 28. So I'm going to get a cheaper entry right here. So I'm going to buy this up at market, Euro Yen, 133.25s. A little bit cheaper than what I would have gotten here. I'm going to get my stops down at, 133. Let's go 09s. And initial target's going to be right up here. This is going to be your first danger area right here, 133.39. So you're probably, if you can, you're going to want to aggressively manage this trade. This is going to be an interesting level right here to break. But looking for a retest of previous structure, 133.49s here for target ones. Again, in the syndicate, we're only doing 1 in, 1 out target taking. So this is going to have to be it. But let me just get this into my account. There, was it 09? Yep. 3309. Okay. Again, in my personal trading, I shoot for extended targets. So let's look and ask ourselves the question. I should update my syndicate members as well. I'm long the Euro Yen pullback, all caps. I'm long the Euro Yen pullback trade mentioned earlier at 133.25. And let's see where we can go for extended targets here. If we are going to continue higher, right? The next level that gets my attention is going to be right up in this zone, right in this 133.80s zones, 133.76s. Let's see what we have here. 91. Just seeing if there's anything else there other than pure structure. I personally, I like to rely on pure structure, but I always look for any type of confluence or anything like that as well. 62, that's going to be the first, that's where that zone is going to start. Not the best level in the world, but this is the potential reversal zone right here between 62 and 97s. Let me just take a look on the 15er. Boom, boom, boom. I tell you what, again, I take targets differently in our syndicate program than in my real trading, just because it makes life a lot easier for those in the syndicate program. But I'll tell you what, man, if you've ever gone from taking multiple targets, I actually just answered this question for a trader, a transformation member over the break, who was kind of thinking about whether to go for 1 or 2 targets. If you ever made the transition from going from a single target to multiple targets, or multiple targets to single targets, man, it's so much easier going off of a single target, man. Less trade management, less analysis. It's amazing. It really is a relief. Now, is it more profitable? Not for me. So at the end of the day, I want to make some more money. But it's quite relieving. So it's a few minutes after the live room closed, actually a little bit, about a half an hour. You see, getting a little bit of a workout here on my bike. At the same time, managing the trade we took earlier today. So we just broke above that level that I was looking at, that I thought would hold, or I thought could hold as a potential resistance. And we'll see if we can get the profit targets. That'd be pretty cool. But yeah, look at that. killing two birds at one stone, able to get some physical fitness in on my Zwift, while hopefully making some money as well. So as you can see, that trade worked out pretty well. We hit target 1s live, and then a little bit later in the afternoon, we ended up hitting target 2s as well, making for a pretty decent trade. And really, that's all I'm looking for, guys. I'm not the type of trader that tries to get 10, 20, 30 trades a day or 10, 20, 30 trades a week. Really, I look for one good trading opportunity. We go through our analysis each and every day in our live trading room, and we filter out a few trade setups that are on our radar, and we watch, and when the market gives us what we need, we execute the trade. Today we had two on the radar, two mainly on the radar: euro yen, euro dollar. Euro dollar didn't work out, never got the trade entry, missed by a pip, but euro yen did, and we were able to make some good money. And that's professional trading, guys. It's not about the home run trade. There was a trader the other day that commented, "Akil, you made 30 pips? That's nothing. Why waste all that time for 30 pips? Well, I'll tell you what, 30 pips plus 30 pips plus 30 plus 30 plus 30 plus 30 plus 30, when you do that consistently, that adds up to a lot. And when you throw that home run trade on top of it, boom, you're in business. And that's how you have massive years. So don't be too quick to poo-poo those 30 pip trades, those 50 pip trades, those 20 pip trades. It may not sound sexy like what you're hearing on the trading forums or Twitter, but keep in mind, people that present their trades on there, they're just trying to show you the best of the best. They're trying to impress you. So they're going to tell you these big margins. That's not necessarily the reality each and every day. For some it is, but for the majority it is not. So keep that in mind. But anyway, if you're interested in joining us and seeing how we do this trade on a daily basis, I recommend two things. Either A, checking out the live trading room, or B, checking out the syndicate program. You can find a link for both of those underneath the description box. I know we have a $1, I think it's a 15-day trial in the syndicate for just $1, and a free 1-week trial in our live room. So come and check it out. Also, Transformation members, if you haven't seen it already, check out yesterday's private strategy lab lesson. We actually went over a range bar trading strategy, which essentially is the same thing that we did on today's trade, just a little bit different price chart, but the same type of concept. So make sure you check it out, and that way you can learn how to do this yourself. So until next time, traders, plan your trade, trade your plan. If you like what you see, take a second to hit that like button, take a second to share this on social media, and of course, if you're new, if you feel I have earned it, hit that subscribe button and make sure you don't miss the next video. There will be another one this week most likely, so make sure you stay in the loop. So I'll see you guys next time, and you guys have a great week of trading. Take care.